What's going on, guys? I'm back here with another stock analysis, and this time we are going to go over Activision Blizzard and basically discuss the potential upside I see with this stock. And as always, if you like the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that big red subscribe button down below. I'd really appreciate it. So we have a lot to go over. First, I want to start by going over the Activision Blizzard chart. So here today, we're down 2.25%. In the last 5 days, we're down 7.37%. The last month, we're down 26.25%. The last 6 months, we're down 39.95%. And then year to date, we're down 36.28%. And you can see that the stock basically topped out here around 103, and it kind of stayed level here through June. And then ever since June, we've seen a pullback here. So we've seen this also in a few other industries, most notably in telecommunications. If you checked out my AT&T video that I posted about a week ago, you saw that around the same time, all of the telecommunications companies started pulling back as well. So not only is it good to look at Activision Blizzard, but we want to look at the market as a whole. So the market as a whole has been dropping significantly over the last few weeks. So we're down 1.11% here in the S&P 500 today. In the last 5 days, we're down 3.35%. In the last month, we're only down 2.5%. 6 months, we're still quite a bit up. But obviously, this has a lot of large caps in it. You have Apple, you have Google, you have Tesla in here, a lot of companies that are kind of holding the market up right now. So what is kind of more important to look at least recently and in current market conditions, is IWM. So IWM is the Russell 2000, which has all basically the small caps, or a lot of the basically 2,000 of the small caps. Activision Blizzard is more of kind of a mid cap. Small caps is kind of 2 billion to 300 million, but Activision Blizzard is still kind of in between. It's a mid cap stock. So at least we need to look at both sides of the coin, and then we can kind of get a good idea. So in the Russell for IWM, we're down the same as Activision Blizzard on the day, I believe. Let's just double check, 2.25%. So yep, in the Russell, we're also down 2.25%. On the last 5 days, we're down 7%. If you remember, Activision Blizzard also was down 7%. In the last month, down 9%. 6 months, down 6%. And obviously, as this is an index fund, it kind of levels off and has a little bit less volatility than you're seeing in Activision Blizzard. But most notably is basically the last month, right? We're down almost 10%. In a lot of these smaller cap stocks, and that's translated over also to mid cap stocks. So obviously, with Activision Blizzard being down significantly more than some of these indexes, the question is, what is going on with the company? So what we've seen recently, and if you kind of follow any of the news around Activision Blizzard, you've seen that there has been a lot of concerns over basically toxic workplace culture, and the CEO is basically getting a lot of the blame for it. So the CEO is Bobby Kotick. I'm not sure if I'm pronouncing that right, but basically this article came out today, and it's talking about some states that are now basically asking for the CEO either to resign or basically start pushing for the CEO to improve the workplace culture. So personally, obviously this is a huge issue, and it can be a huge issue over time. But with a place like Activision Blizzard, you kind of expect to have, I wouldn't say a certain amount of, I don't know the exact issues. I don't work at the company. Obviously, there are certain things that could be going on. But you expect the type of people that work at Activision Blizzard to be kind of maybe 30, 35-year-old guys, kind of still have a college type of attitude towards things. And that's kind of, I mean, to be expected, right? They're creating games for generally teenagers to 30-year-olds, and kind of in that range. So they kind of still need to think in the mind and be able to have an understanding of that age frame to design their games to target those types of people. So there's obviously going to be issues with that. Again, I don't know exactly what they are. I don't work at the company. And that's kind of beyond what we're looking at. We really want to dive into the company, see what potentially could go wrong, and in terms of its basically capital and its ability to make money. And I don't see this as being a huge concern for the company in terms of making money long term. I think there's always going to be people who want to work at a company like Activision Blizzard, which produces games like Overwatch, World of Warcraft, Call of Duty. You have a lot of big titles there that are all basically producing a lot of money, have a lot of diehard fans. So along with that, there's kind of someone getting into it who's leaving the company, and that's Jessica Gonzalez, who, at least according to this article, is a key figure. I ended up looking her up on LinkedIn, and she's actually only been with the company for 2.5 years. And she's also a test analyst at the company. So she doesn't really do any programming. She's mainly does the testing and things like that. And from kind of reading this article, it sounds like she was one of the initial leaders of kind of the movement of calling Activision Blizzard to step up and change its culture. And she finally announced just the other day that she was going to resign from the company. So that's just additional bad news, but basically it touches on the fact that, right, the company, what can hurt it in the long term is losing good people. So Jessica obviously probably was a good worker. Again, I couldn't say, I didn't work at the company, but long term, if you turn off a lot of this good talent, that good talent is going somewhere else to your competition, and that can create problems with the business long term. So this is definitely something to watch out for, but the question is it blown out of proportion at this point? And what is the company going to do to fix it? And it seems like there's a lot of pressure, and the company should find ways to basically navigate the system, turn its culture around, and start heading back in the right direction. It's a good thing that this is all public. It's out there, people are aware of it, and basically it forces the company to be better, to step up and kind of improve their workplace culture overall. So overall, I think this is a positive thing long term for the company. I don't want to spend a ton of time on this, but this is something that is massively important and that you should look at whenever you look to invest in a company, and that is basically their balance sheet. So here we have Activision Blizzard's balance sheet, and something that's really stands out here. So their current assets, you have 10 billion. I believe this number actually is because they're all in thousands. So you have 10.5 billion, and in their current liabilities, they only have 3.1 billion. That is huge. So they basically have 3 times in assets their current liabilities. So that's a huge positive. And then in their non-current, so longer term debt, they're looking at basically 5 billion here, and in their non-current long-term assets, they have 12.5. So again, over double. So this is just a quick remark basically saying that financially, the company is in a good position. If the market has a turn down, they have plenty of basically current assets, cash on hand to basically handle any storm that's kind of thrown their way. So personally, I think one of the best metrics for companies to look at is their PE ratio, specifically their forward PE ratio. It gives you a better idea of where the company's heading and basically where its price to earnings ratio obviously is at. So here what we're looking at, and what I like to do, is basically compare not only the company against itself or its previous self before it encountered some issues, but also compare it against some of its competitors. So what we have here is the forward PE for Activision Blizzard currently. We have approximately what the average over the last kind of 3 or 4 quarters forward PE is for Activision Blizzard here at 26. And then EA, which is Electronic Arts, it's another big game manufacturer. They make the game Battlefield as well as a number of others, but their forward PE is sitting at a 24. So just to show where I'm getting those numbers from, here is Yahoo. We're at the 15.27 for the current forward PE, and then the 26 number, we're kind of looking at these 4 numbers here. So we have 26.6, 25.84, 27.25, and then 25.71. So I'm just saying basically that all of these 4 numbers come out to around 26. And then for EA, Electronic Arts, we're looking at the PE. Again, it's seen a bit of a fall off recently, so I'm looking again more at these 3 numbers, and I'm saying you're sitting probably around the 24. So that's where I'm getting basically these numbers at. Again, the current price of Activision Blizzard, that's what we have here, and that helps us basically form a ratio where we can start getting potential price targets of what we would expect from EA. or sorry, from Activision Blizzard. So here, if we compare Activision Blizzard against itself, so basically here's the math that we're doing, right? We're taking the current price, multiplying it by the potential forward PE that we would have seen in the past with the company, which is the average of 26 here, and dividing it by the current PE, forward PE. And we're getting a price target of $97.53. So if we do the same math for EA versus basically the PE ratio here versus, again, here's the math real quick, 24 multiplied by 57 divided by the 15 here, and we're getting a price target of 90. So what that represents for the stock is an upside of 70% for Activision Blizzard versus itself. So a 70% upside here in this price, and in the price target versus EA, you're looking at almost a 60% upside for the stock. So last thing that we want to look at is how does that compare to analysts, right? So analysts, their sole job is basically analyzing stocks and putting together price targets on what they're looking at. So you can see here, this is the Wall Street Journal, and you're basically looking at where these analysts are rating the stock. So how many are putting buy ratings, how many are putting overweight, hold, etc. So currently you've got 20, and basically over the last few months, they've all been saying that it's kind of undervalued, and that you should basically be buying the stock. And then here is what's kind of very interesting. So what we did, right, with the PE ratios, we got a 97 price target for the higher one, and then a 90 price target for the lower one when comparing it to EA. And what we're seeing here is that analysts are putting a price target, at least for their average, of 93.24. So that is right in our range. And then if you actually look at the median, it's 95. So both those numbers right in our range of what we're kind of expecting, which gives just more confidence, right? It just shows law of large numbers, that if more people think there's a price, or that the stock should be at a certain price, then it's basically more likely to head there, because there's basically the sentiment that it's undervalued. So this is all good information. Obviously, look at the stock yourself, see if it's a company that you believe in. Personally, I use its products. I play Call of Duty here and there, and I enjoy it basically. So look at the company, evaluate the company, find what metrics you kind of believe in and you can get behind and you understand. And then if it's a company that you like and you see a lot of long-term potential in, then pull the trigger and make an investment in it. But I hope you guys enjoyed the video, and like I said at the start, if you enjoyed it, I really appreciate you dropping a like down below. And if you want to see more videos like this one, make sure you hit the subscribe button. Otherwise, have a wonderful rest of your day.